All right, well, welcome everybody to this week's stock market review, also known as the Yummy SMR. Today is November 29th, 2023, so we're about to head into December, and market's still pretty strong, so we're going to take a look at all the charts and see what's going on with that. All right, so we've got good turnout today. Hello, everybody. Good to have you here. All right, so let me jump in and get the administrational items out of the way, which includes our disclaimer on risk. We want you to know that there are risks involved in trading or even investing in the markets or pretty much anything you do financially, right? But you need to be aware that in the markets, past performance does not guarantee future performance. We deal in a realm of probability, so even if we have a proven system that wins more often than not, we're still going to lose sometimes. So you need to take that into account and also take into account how to protect yourself with risk control. We want you to also be able to trade with money you can afford to risk, all right? That always makes life a lot better doing it that way. Also, too, if we look up any stocks for you guys, I'll give you my opinion, my analysis on those. I'm going to give you my analysis currently on the markets as well. And remember, those are my opinions based on how I analyze the markets. And I use a variety of software tools that I've developed as well as some of the more conventional forms of technical analysis like fib retracements, extensions, pennants, things of that nature, inside price bars at times, and so forth, and trend lines, of course. And then I use the Elliott wave too, which is a form of technical analysis that's a little bit more exotic, but that basically attaches numbers and letters to wave patterns and corrections. And then finally, before taking any trade, be sure to check with your financial advisor or whoever manages your money to be sure what we suggest to do here is suitable for you. Everybody's a little different, so make sure you check with somebody that knows your financial situation. All right, now in terms of books, I've got books that can help you on risk control. Those are our money management books. I've got two up there. One on the far left, it's called A Trader's Money Management System. It's a comprehensive book, came out years ago, really very well accepted in the marketplace. And that's a great book to go if you want to get an in-depth, comprehensive view of risk control and why you need it. Then last year I came out with Money Management for Traders. And this was a great book because it basically took what you needed to know and summarized it almost like a Cliff Notes book of my larger book on how to go ahead and get started and implement a risk control program into your trading. So that's available as well. Then of course I've got my Elliott Wave Technique Simplified book, which is done extremely well, and that was released by McGraw-Hill years ago. Survival Guide for Traders is out there by Wiley, and my new Art of Trading book now that will replace the other one that came out, in 2008, I guess, so we're due for an update. So I've been adding to the Art of Trading book, so it's probably going to come out next year, but there's so much material I wanted to add to it that I wanted to get that in there. So it's coming, it's on its way, but I'm jam-packing it. It's probably going to be the best book I've ever written, so I wanted to make sure it was very comprehensive, and that'll be coming out shortly. All right, so let's jump in. Let me just widen this up a little bit. Let's go ahead and do this. This is the economic announcements that are coming out today. Now, we start with Wednesday today, November 29th. MBA mortgage applications come out every week on Wednesday at 7 a.m. Eastern time, so those are out. Nothing dramatic there, that's for sure. Okay, real estate's kind of slowing down, needless to say. GDP is out, international trade in goods, corporate profits, retail inventories, wholesale inventories, EIA petroleum status report, and the beige book is coming out. And Loretta Speaks, who's involved in the markets and the Fed and stuff. All right, Thursday, November 30th, OPEC is coming out, jobless claims, personal income and outlays, Chicago PMI, pending home sales, and the Fed balance sheet. And then Friday, first day of December, we've got PMI manufacturing, ISM, and the normal weekly Baker Hughes rig count and construction spending. So in terms of these announcements, I think what the market is looking at is strength in the economy, and that can be in the form of jobless claims, CPI for inflation and things like that. So when those come out, people pay attention to that because they're concerned about interest rates going forward. So in this environment, when the Fed announced on the better CPI numbers that basically they were going to cut back on interest rates in terms of raising them and keeping them flat. And that, of course, caused the market rally that we're still in right now. There's some talk now that the interest rates could go down in 2024 around the spring or summertime. We will see what happens with that. I think it depends on if the economy can rebound from here, and depends on inflation, and it depends on if we settle down into a soft landing versus going into a more deeper recession, so to speak, in the next year. So we will find out and see, but that's going to play a big role in things. All right, so here's the daily chart for this week, and basically we're using my software overlaid onto a chart in NinjaTrader. And basically I want your eyes to go to the upper left hand side. I'm going to put a little circle around this high here that occurred back in 2022. And this is a daily chart, all right, so remember that. And on the daily chart, we hit a significant high. Actually, we hit a significant high across all the time frames at that point. But that signified the end of a fifth wave in our Elliott wave sequence. And there are 5 waves in a trend. And so that marked the end of the bullish trend that had lasted about 13 years at that point. And so then after that, the market changed direction, which it normally does after an Elliott wave 5, and we went into a corrective pattern. Now, one of the important things to note here is when the fifth wave occurred on 2022 on the daily chart, that also signified the wave 3 ending on the weekly chart, at least the potential ending of it. So that would be a wave 3, and there are 5 waves for those of you that are into the Elliott wave inside a wave 3. And this is the kind of stuff I cover in my book, and we have online courses for this. So if you want to learn more about the Elliott wave and how to provide a probability index on the wave count, definitely check out that information. All right, so then after it went into a wave 3 on the weekly, then it goes into a major correction. And in the correction here, you can start to see the wave counts indicating the 5 waves down onto the first major move, which was the A wave. Now that A wave is brought over from the weekly chart. So there are 5 waves in an A wave. And then we had an ABC correction here for a B wave. And then we had another 5 for C. But this we call a failed C wave, because I'm going to show you the weekly chart this week that indicates where a normal correction after a 13-year bull market should have ended. And this one is definitely not near the price it needed to come down to signify a major long-term correction on the weekly charts. Now, what may happen, however, is this could be a minor 4 bottom here. And that would mean that if that's the case, prices are going to now take out the top here, and this will be a continuation of wave 3. Is that possible? Anything in the markets is possible. That is probably not the probable scenario, but we have to keep it on the table, because until we break below these support levels, we're not going to know really for sure that that is off the table. Okay, so keep that in mind. All right, so let me just erase these. So we had that failed C, and then we kind of moved up off that. We went above B wave, and that put it into a complex correction, which is a messier type of Elliott wave correction. And we've certainly experienced that pretty much for all of 2023, as the market has been kind of chaotic and very difficult to trade on certain time frames. Okay, so it had a week or two of bullishness, then it'd be followed by some bearishness, and then off to the races you go again. Now, what we're watching right now is that we had a high put in here, okay, in September of this year. And that could be a possible high for a D wave. But we're going to have to see how much strength this current move up has. Because if it takes out the top of D wave, then that means D wave is still in progress. Now, for this to remain as a D wave, prices cannot go above this very solid blue line representing the all-time market high. So anything above, or just below rather, that all-time market high is going to be considered a D wave top. If we break the all-time market high, well, that means that this is not going to be concluded as a long-term correction, but instead a more shorter-term correction. And then we're going to put in another top. And at that particular point, we can probably enjoy a bullish market for a while before the next major correction. And then at that time, we'd be looking at a major long-term correction after that. But so far, I'm sticking with the fact that we are in a current long-term correction, because until the top of that 2022 high is broken, that's the most valid representation for right now. All right, so that's kind of where we're at. So going forward, you know, I put these charts out for all our Yummy subscribers on Sunday, and I update them every Sunday. So we have a new support level here at 32,327.20. So we want to watch that low, and yet at the same time, we want to watch this top that could be a possible D wave top right here. Okay, so we're kind of in between this area. So when I'm in between two major support and resistance levels, I call it more of the same. All right, because anything could happen in here. We could get a move down, we could go sideways, we could still collapse and go down. So that's why I call it more of the same. And you can certainly see we're probably due at some point here for a pullback. And then that will probably, at pullback, we'll try to isolate for you for a target. But it usually comes down to a 50% roughly retracement zone, which we call the inflection point. And then we see what happens from there. So I would expect that to happen at some point pretty soon, and I'll show you why I think that in a minute, but that's kind of where we're at. Now, if anybody has any questions on this, feel free to ask, okay? So if we break, one more thing, if we break below this failed wave C bottom at 28,660.94, then that's going to lead me to confirm that we are in E wave. And E wave is part of a long-term corrective pattern that should take us down to the more expected long-term target. And I'll show you the weekly chart of where I think that is in just a moment. All right, so that is the daily chart. Here's the 60-minute chart, and basically you could see ideally in the 60-minute chart where we had that 1, 2, 3, 4, 5 pattern ending down here, and now we're into the ABC. So here's my thought on this. So if this is a D wave top, we're not sure yet, but if it is, then these 5 waves down could represent wave 1 of E wave. So if we're in the beginning of E wave, it is very possible, all right, that we are looking inside the major move or the long-term E wave, and this is how it may turn out. And this ABC could be a wave 2, provided it doesn't go above the D wave high. So as long as prices remain just below 35,679, and we've come close, okay, then this is kind of the way I'm looking at it. If it goes above D wave again, well, then that just means that this was a correction inside D wave. So that's kind of where I'm thinking with that. And now I want to take a look at the longer term chart to give you an idea of kind of where I think prices are going if this is a long-term corrective pattern. So if that's the case, here's our 13-year bull market that extended way to the left out there, but I wanted to zoom in on the current activity here. So here's our 2022 high that I showed you before. which was a wave 5 on the daily chart, a wave 3 on this weekly chart. So every price bar here represents a full week. So this is kind of representative of a longer term chart than the daily chart. And so therefore we call the wave 5 on the daily chart a minor 5 because it's inside the wave 3. And then after that, these are the waves we looked at before on the daily chart, the A, the B, and the failed C, right? And then we got into this pattern here of a possible high on the D wave there. Then it started selling off. Now this chart was done October 1st. We'll update this again in January. But so then we had a situation where we had a pull down, and now we're getting that pull up, and we'll see if it rolls back over or goes higher. And that is where we're at now. All right, in terms of what a target should be on the long-term situation like this, when I draw the fibs in, fib retracements that is based on the 13-year bullish Elliott wave market, we get a zone, a fib retracement zone here, down in this area where I have the red rectangular box. And that represents a retracement of 38.2 to 61.8%. And so that is a high probability area where 70% of the time, if we're in a long-term correction, we'll end up in this target. 15% of the time, they're a little bit shallower, but usually go between like 23% and 38.2. And then 15%, they're a little deeper, but can't go into the wave 1 area of Elliott wave 1. But that's so far back, you don't have to worry about that. All right, so that's kind of where the zone is for that. If we turn it into prices on the Dow, that's between 23,273 and 15,014. When is that going to happen? Well, if we get a sell-off here before the end of the year, which is not much time left, then we're probably talking of a target date to reach this box area here, probably in the latter half of 2024. If this meanders a little bit longer, of course, that throws that time frame out further. So we can't give you a really accurate time frame until we start taking out those support levels that I showed you before on the daily chart. We haven't done that yet. All right, one more wrench to throw in the works here is one of our indicators here is called the PTF, and that's this indicator right here. And notice it is red right now. So this PTF indicator has a 75% accuracy rate, which is damn good for the markets, right? So it's showing that on the COVID low back in the 2020 area, during COVID, it triggered a red PTF. So what that means is that there's a 75% chance that the market during the next major correction will go below the COVID low. And so that COVID low is at 18,213.60. So if we are in a long-term complex correction, it should resolve itself somewhere between the COVID low and the bottom of the fib 61.8% retracement. So because of this indicator, which is proprietary, basically I'm calling the low in this long-term correction anywhere between 18,213 to roughly 15,000. All right, but we have to confirm that the long-term correction is in place, and we can't confirm that until we break out those support levels. All right, so that is the long-term chart. I don't always show it every week here, but I wanted to go over that. I think it was time to kind of review the bigger picture. Any questions on this? Feel free to ask, okay? The next thing I wanted to throw out there is, let me magnify this a little bit, okay, is the current situation on the housing market. I always like to cover this a little bit, and I update this chart every week, and it's actually the spread is getting a little bit bigger between the CPI and home prices. So let's take a look at that. So this black line here at the bottom represents the CPI, Consumer Price Index. It's basically a measure of things like inflation and things like that. All right, so this red line is your Case-Shiller Home Price Index. So basically, whenever prices on homes get extensively away from the CPI down here, you call that a bubble. Okay, and so that happened. That bubble that occurred there was our famous 2007, 2008 financial crisis, right? And so that did cause prices of homes to come down and come more back to the norm, getting closer to the CPI. All right, so that's what happens in a bubble. You have a reversal, it reverts back to the mean. Then after that mean was reached, okay, market started moving up like it normally does after a correction. And then interest rates were still pretty low, okay? They kept them low, which helped this move up. But then COVID came, and interest rates went down even further. Money became easier. And of course, that prices on homes took off, not only for that, but also because people were finding they could remote work from home. And therefore, a lot of people moved out of the city, creating demand in the housing market, in the suburbs, and so forth, thus coming up, okay, increasing that to the upside. Interest rates were the lowest they've been in just about forever, right? So money was easy, okay? It was easy to get the house you wanted, and because the rates were so low, monthly payments were affordable, and people, for the most part, kept their jobs through remote accessing their, remote working and so forth and so on. So nobody was really fired at that particular point from their job. They just kept them. Life was good. PPI money came in and so forth. Or the PPP money, I should say, came in. All right, now, here's where we are now, though. Look at where the distance now between the CPI and housing. And there's a lot of explanations, and you can look at a lot of YouTube videos for why that is occurring now. And there's many schools of thought on this, okay? Many people think now that interest rates could go down next year, housing could explode, okay? The only problem with that is that you're so now far from the CPI, and housing, even at these levels, even if the rates came down, it would still be tough at these levels for many people in, I would say, average and good jobs, but average paying jobs to afford homes right now, okay? Even if the rates came down a little bit. So I know Cochran is saying if the rates come down, the market's gonna explode. Yet some other people say that's hogwash. Prices of houses have to come down so people can actually afford them. And so there you have it. So there's two schools of thought. My feeling on this is that if history proves correct and housing eventually comes and reverts back down to a norm closer to the CPI, then we're probably going to have lower prices in housing. Call it a housing bust, call it whatever you want. But at these levels, I think you'd have to come down close to 40% in housing for this to get into an area that's acceptable in terms of how close it is to the CPI based on history. Now, every bubble out there, everyone, always ends with people, including analysts, saying, well, this time it's different. The market is different this time. And as soon as you hear that, run for the hills, okay? Because human behavior is human behavior, and things revert back to norms. They just do, okay? So there we are now. Housing is probably up there because people are kind of undecided about what to do. They don't want to sell their homes with the lower interest rate mortgages. But if the economy tanks and people lose jobs, for example, they'll have to sell, okay? So something may come along that interrupts what they kind of want to do, I guess. So we'll see what happens with that. And I'd love to get some feedback. I'm sure maybe some realtors are out there listening to this. Give us some feedback on that. But I'm a stats guy, and when I see lines like this indicating current bubbles, then that's a warning to me. Okay, it's just the way it is. All right, so that is kind of what I wanted to show you on the chart situation. We have about 5 minutes left. I do want to quickly, though, remind all our subscribers, don't forget to download the written report each and every week because I update thoughts on the market, and I'll update support levels and resistance levels at times. So make sure you definitely grab this, and we got some hyperlinks. You know, if you're interested in our software, you can click there. But I always put the latest chart up there for you guys so you can check that out on both the 60 and the daily. If you also want a more comprehensive view of the market, that's where the market opportunity report comes in, and I do that. And then, of course, I have the Oracle as well, which is also comprehensive, but adds the extra element of indicating what you should do at certain times and suggestions for some hedges or markets you can trade into. And then don't forget, the More also has the stock picks for each and every week. Okay, so you kind of have that now. So there it is. All right, so let me come out of here. Let me dump that out of here. All right, so here's the current chart on the Dow. I just wanted to show this real quickly. So here is the top of D wave, this little line right here. So we're damn close, okay? So we'll see. Now, what's interesting is, you know, here's our target for those 5 waves down, right? Okay, so it hit that beautifully and bounced off that, bounced off the bottom here. We're seeing pretty good bearish divergence here. Now, bearish divergence occurs when prices go up, but momentum decreases. In other words, there's not as much energy in the move up as there was earlier. So not as much buying, okay? So it slows down a little bit. So that usually occurs near some a mature trend and sometimes near a top. Now you can have bearish divergence for quite some time, so it's not an indicator in itself, but it's telling me here that we're kind of running out of steam and we're kind of due for a correction. I mean, we've had a number of price bars in a row. Yeah, we may go higher. It'll be interesting to see if we go above this line, but at some point we should have a pullback, and that pullback should be to an inflection point roughly around, I'll say 34,165 if it happens now, okay? Now, with that said, we've got a very strong owl here, so, you know, you could get one more high on the inflection point, so we'll certainly see how that plays out. Longer term on this weekly chart over here, this is a weekly, daily, 60-minute chart for those new here. So on our long-term chart, here's the PTF red for the COVID low. Okay, so that's kind of what I showed you before. And here on the weekly chart is the 22 high. All right, so even if we go above here, that means we've got a new D wave. It still has plenty of time to exasperate its bullishness and sell off if that's what's going to happen. So we gotta see what's going on in that. Now, one of the things that I've noticed on YouTube, a lot of times they'll say, okay, well, the market's a rebound. This is your last time to sell everything now. I don't really agree with that. I think you have to look at the support levels because the market, you have to follow the market, and sometimes the market doesn't do the logical thing. And so you don't want to miss a trend. And we've been recommending long trades in our More report for quite some time, even though our overall thoughts on the market is that we could be in a long-term sell-off. All right, so the kind of going long during a long-term market sell-off might not make sense to a lot of people, but there are very bullish runs in a bear market. And so you want to take advantage of that. So, and in case we're wrong, then you'll be pointed in those bullish runs in the right direction. Okay, so that's the way you got to look at it. So I disagree with selling things without looking at the price levels in terms of taking out support and resistance levels. And so far, we have not taken out the support levels we need to take out to warrant any type of selling. And the nice thing about technical analysis, if you really follow it, you're not going to miss. All right, people get worried that they're going to miss the sell-off. No, you're not, okay? Watch those support levels. They will be your guiding light into telling you what to do, okay? So that's the way I look at the markets, and I like to pass that on. Frank, we can look at the gold market here. Now, gold, I use the GLD for this, okay? So the GLD market is, you know, moving up, and we kind of expected it to. We had some yellow PTFs across the board. I think probably long term we're heading up above this high. And again, I'll open this up. I usually show this every week here. So this was a 2011, we thought wave 3 high. We had, let me just reposition this chart. We had a wave 4 here. Remember, there's 5 waves and an Elliott wave. And we had a target that actually got hit for here, but with the green PTF, we're going back in the target, okay? We had this little pull down to the inflection point, which is what these fibs are representing there. And now we're getting a springboard reaction into that. I think very possible to get to 220 on gold, okay, at this particular point. I think, again, if you look at the short-term chart here, we may be close to an area where we get a little pullback, all right? That's why we look at these short-term charts at times, because, we're getting close to a short-term target up here with the fib extensions. And so we'll probably get a pullback to an inflection point or something at some point. But bullishness on gold, long-term is fine. Just don't have your stops so close unless you're trading short-term, okay? Silver is another one we'll take a quick look at here. And on this one here, all right, it's starting to break up, but I gotta wait for this thing to turn green, okay? So as soon as that turns green, I'll get more bullish on silver. TLT is the bond markets I like to look at here, okay? This is a great example of why I wait for the PTF to turn, because a lot of people thought there was a bottom here, but we had the red PTF, and look what happened. It curled right over. And now possibly we could be close to a bottom, but this indicator over here is still red. So this pull up here is only a retracement as long as that PTF remains red in the long term. So I can see the 5 waves, but maybe in a 3, 4, 5 to complete the bottom here. We'll see. Okay, so I'm not going long yet on TLT. All right, let's see what else we got here. Oh, NASDAQ. I wanted to show the NASDAQ market real quick. All right, so in the NASDAQ market here, we're approaching a significant high level here. Oh, I got one bad price bar over there. Okay, so we're getting close to a high level here, okay, on the NASDAQ. So we'll see if we take that out or not. Time will tell. So the NASDAQ is more bullish than the Dow, and the NASDAQ will also keep, I think, the Dow and the S&P higher, or at least at the current levels, all right, before any type of major sell-off can happen. So NASDAQ, of course, comprise the S&P as well. There are many stocks in the S&P for the NASDAQ, the big ones. But you can thank your tech stocks, your Googles and things like that for this move up. So, I don't think we're quite ready to do an immediate sell-off here. I think we're going to be delayed. I don't see it really coming early in December either. Yeah, pullback, yes, but I don't see a big sell-off now. I think we're going to have to delay it until next year sometimes. So we'll have to see how this unfolds. And again, what we have to watch for in this, really, if we go back to our chart here, let me just go back here a little bit to this chart here, we kind of have to see, all right, what happens on the next pull up and see, we have to start breaking these support levels down. And that's just not happening yet, okay? So you have time. You have certain time. All right, so hopefully that, so let's see what Frank's saying. You shorted the spider, and why did you do that? Okay, what made you believe to short the spider? Let's take a look at that and see what the spider looks like here. Maybe there's an indication. All right, you probably think right now it's going to eventually come down again. But again, we haven't broken any support levels. So I think you jumped the gun on that. All right, it will come down, I'm sure. But I'm a little concerned because you got a green PTF here still. So I wouldn't have shorted it yet. Okay, not yet. Okay. You can have the gaps, the 5 gaps up, you can still have, Frank, but also use price. I mean, use support levels based on price in order to time your entry, okay? And of course, that would have to be a short-term trade. So in other words, when I get a signal, I also look at price. And if I need a support level to be taken out for a short trade, I'll wait for it, even though I may get some indications that it's time to do it. All right. It's just a little extra insurance to make sure there's not one more hook to the upside. Okay. All right. So I hope that helped everybody today. We'll be back next week. And again, you know, you're not going to miss anything as long as you watch these markets from a technical standpoint. Okay. So I think you'll be okay on that. And we'll see what happens. But always remember, always follow the trend. And as Paul Tudor Jones used to say, you know, in the trend is your friend. And really, we don't care why it's trending, because sometimes the markets aren't logical. Just don't miss it. That's the thing. Just don't miss the trend. So I personally don't really pay much attention to why things happen. I just make sure I don't miss the current thing happening. All right, and with that said, Gene, I'll turn it back over to you. Thank you, everybody, for coming today, and we'll see you back here next week. And we're in the holiday season, so happy holidays to all. Gene, back to you.
Well, great session, everybody. And if you came in a little late for the session, it will be posted on the YouTube page. And also, too, on Fridays, for Stock Analysis Fridays, come join us at 8 a.m. Pacific time. And that is when then it will spend a good full hour looking over your stock picks. And I guarantee you'll walk away with some great picks for yourself. So definitely join us for that. I'll be posting the link for that. And any questions for anybody, if you have them, just type them for me in the chat. And yes, Frank, well, thank you. I appreciate that compliment. But if you have any questions, feel free to type them in, and I'll be here for a few minutes just to help out. I know we've been having some Black Friday and Cyber Monday sales, so if you have questions on anything, feel free to ask. I'm here for you.
Thanks, Gene.
Happy Thanksgiving, Frank.